The Personal Finance Executive Summary, December 11th, 2013. Welcome to Personal Finance. Market Watch by Phil Springer. Alan Greenspan's now shop-worn phrase, irrational exuberance, doesn't apply to today's stock market. At least, not yet. A market bubble? History says otherwise. The stock market is overbought, but not poised for a crash. Along with the rising tide of U.S. stocks this year has come an ever louder volume of commentary that we're in a bubble. But the real bubble, if any, likely lies in the chatter about bubbles. After all, in recent years we've heard about bubbles in gold, treasury bonds, housing, art, and more, so why not stocks? However, it's hard to have a bubble when everyone fears one. So here's the bottom line. You can still sleep at night if you invest for total return, growth, income, and rising payouts in financially strong companies with reasonable valuations. Stick with the best and ignore the rest. Growth Track. Healthcare, Full-Bodied Gains by John Persinos. If you've ever wondered why there's incessant yammering in the media about healthcare, consider this statistic from the U.S. Centers for Disease Control and Prevention. The U.S. healthcare industry is projected to generate total revenue this year of nearly $1.7 trillion, accounting for almost 18% of U.S. gross domestic product, GDP. That's a gigantic revenue pie, and a lot of companies are elbowing each other for an ever bigger slice. Our growth portfolio's healthcare sleeve is populated with large, cash-rich companies. Bayer is a buy up to $107. Novartis is a buy up to $76. Valeant Pharmaceuticals is a buy up to $103. On the money. Retirement withdrawal. Get the rate right. When investors consider retirement, there's generally one question that comes to mind first. How much money do I need to have saved in order to retire? But while the focus in pre-retirement is on how much money you need to save, the post-retirement focus is on how much income that pile of saved money can provide. For many decades, 4% has been recommended by most financial planners as a sustainable amount to withdraw each year. So if you need $100,000 per year, you would need to have saved $2.5 million in order to retire. But don't forget that future dollar valuation will play a large role in maintaining this 4%. Many retirees are choosing annuities. A guaranteed income annuity may be a good option to consider for your base income. For those who want to explore other options, Investing Daily analyst Jim Fink has consistently earned impressive income for investors using his Options for Income service. In fact, he recently closed 55 winning trades in a row, without a single loser. Conservative by nature, Jim has found an edge to keep safe odds in your favor. Click the link next to this video to find out more. Thank you so much for watching, and join us next time for the executive summary of Personal Finance.